What's up, guys? Thanks for joining me on this YouTube live. This is the Mortgage Monday update. My name is Sam. I'm your host. So last week we started our first Mortgage Monday updates. Today is the second of the Mortgage Monday updates. And if you're new to this channel, my name is Sam. I'm a real estate broker and mortgage loan officer. I focus mostly on the lending side, and I work in the state of Florida. So yeah, basically I'm here to help you guys navigate the process of buying and selling real estate, but primarily on the transaction side. So I'm helping you guys with the transaction process, because I know understanding the loan process can be a little bit challenging. A lot of people don't understand a lot of the terminology, a lot of what goes on in the transaction process of getting a home. So that's my goal. That's what we're here to do. So it's every Monday from 7 to 7:30. Make sure you subscribe and you lock in. So I'm gonna start off with mortgage rates. We saw that the Fed had increased rates this month. So it's increasing the federal funds rate by 0.5% or 0.5 point. And basically that makes all the central banks react by increasing their rates of all their products and funds that they lend out to institutions. So if you're gonna go get a mortgage, you probably noticed that the interest rates are high. Now, they don't usually go lockstep. When the funds rate goes up, interest rates go up. They don't usually kind of work that way. But rates typically have been going up high since the Fed has been raising rates. But we have noticed a little bit of a cool down, because inflation is cooling down a little bit and interest rates are starting to taper down just a little bit. Now, this is housing interest rates. So this is like if you're going to get a mortgage. So we're seeing those interest rates starting to cool down a little bit. We're also seeing prices starting to cool down. So it's a good sign, but we're not quite there yet. It's still tough out there. It's still unaffordable to purchase a home for a lot of people, because those mortgage payments, after it's all said and done, are just extremely high. And it's way more than they're probably paying for rent. So we're seeing inflation cooling, which is a good thing, but we still got ways to go. I think it was at 7.7% last I checked, but we still got a lot of ways to go. The Fed's goal, I think, is to get it down to like 2%, 3%. So we're looking at least another 18 to 24 months before that happens, in my opinion. That's what I think. But the good thing is we're starting to see gas prices go down. I mean, I went and bought gas today and it was just under $3, which is crazy. So I basically filled up my tank when normally I could get gas and it would only give me a half a tank or less. So we're starting to see that happen. All we need to see now is prices of groceries and all the other consumer goods starting to go down. Rent is starting to come down a little bit as well. Not in certain areas, I guess in metro areas like New York, San Francisco, Miami. We're still seeing rent prices still kind of high, but in other places across the nation, they're starting to taper down a little bit too. So hopefully next year, first quarter, second quarter, things will start coming down just a little bit more. So let's talk about the lack of inventory. So lack of inventory is still a problem, even though, well, let's talk about Florida specifically. So I'm in the state of Florida, and in the state of Florida, we do have a inventory issue. So there isn't enough homes for the demand that's here. So we have a lot of people moving into Florida, and there just isn't enough homes. So even though the prices are pretty high and they're starting to come down a little bit, but there's still not enough homes to meet the demand of housing that's needed in the state. On top of that, we have an affordability issue, because most of the homes that are on the market are expensive and out of reach for a lot of buyers that want to buy. So affordability is a huge problem, because we don't see wages that are at a place where people can afford to buy the homes at the prices that they're at right now. So there's a huge wage gap difference, and unless you're in technology or any of the financial services, it's going to be very difficult to purchase a home. So these are people like your frontline workers, your people that work in healthcare, service-related industries, tourism. They're going to have a hard time finding homes that fit their criteria and fit their budget, because the housing prices have just gone through the roof in the past year. So that's something I think the state is working on. There are some programs that are coming out to help frontline workers and people that don't have quite the income to get into homes. And that, in addition to housing prices starting to cool off. So who knows what we'll see next year. Maybe there may be some opportunities to get into some of these properties. I would say if you're in a 2-income or 3-income household, pull your money together and make it happen that way. Otherwise, it's just going to be very difficult if you're a single person and you don't have the income to be able to purchase the average home. Because I think average home prices now are in South Florida, they're close to 600K, 500 to 600K, which is crazy. So I think I mentioned in a video, you may want to check average home prices in South Florida. So I think I did a video on that. So you may want to look out for that one. So with that said, because average home prices are going up average home prices are cooling off and interest rates are still kind of high, what some people are doing, or what some real estate agents are doing, is for their buyers, they're asking the seller to help this buyer buy down their interest rate. So this is almost like a seller concessions, right? So if you see a home that you like, seller's probably having hard time selling it because it's been on the market for a while. Interest rates are too high, so they're not getting that much action on it. You can ask the seller to see if they can help you buy down the interest rate. So it's almost like a seller concessions. And that's kind of the strategy people are using to kind of combat or offset the high interest rates. They're doing rate buy downs. They call them rate buy downs. So if you're working with a realtor, you see a home that you like, but the interest rate that you're being given is a little bit too high, and you've bought it down as much as you can with your own personal funds, you can have to see if the seller will give you some concessions and to help you buy down the rates. So you may want to ask your realtor to see if you can do that strategy when you're going out there looking at homes. All right, so the next thing is, so someone asked me this question. They are looking at new construction and they asked if they should go with the builder's lender. So here's my thing on that. So the builder's lender, so if you're looking at a new construction home, most oftentimes the builder will have their preferred lender that they want you to go with. So this can provide some benefits because they can give you some lender's credits. There's some incentives with that. With that said, I would recommend that you shop around and see if you can get better terms. And if you are able to get better terms, take those terms and show it to the builder's lender and say, hey, look, this lender is about to give me these terms. Can you match that? Right? So you don't have to go with the builder's lender. You can shop around. And then if you get better terms elsewhere, use that to negotiate with the builder's lender to say, hey, look, I don't like those terms you're giving me. I'm getting better terms somewhere else. What can you do? And I've done that with the client. Just try to shop around. If you're working in new construction, you're looking at new construction homes, you are kind of, pushed to use the builder's lender, and you don't have to. But I strongly recommend that you shop around, get a quote, if you can get a rate lock quote, and bring it to the builder's lender and say, hey, look, I'm getting better terms. Can you match that? It'll help you lock in the best terms for your mortgage. So definitely try that. If you have questions about that, just leave them in the comments below. All right, I think that's about it. that's all I wanted to talk about. Definitely, if you guys have any questions you want me to mention on the live, just make sure you leave them in the description, or you can find me on my website, loanswithsam.net. I'm going to be taking off for the next couple of weeks, but I will be back January 6th, 7th, 8th, 9th. So January 9th, that Monday, I'll be back again with more mortgage updates for the state of Florida and the housing market as a whole in the state of Florida and nationally as well. So thank you guys for watching, and I'll see you guys on the next one.